Good evening, everybody. Welcome to the Lock in Your Success Trade and Market Update for November 11th, 2012. If you remember last week, we were kind of stating that we didn't think we were going to break any short or long-term support levels before the election, and we did not. However, after the election, we were expecting a bit of volatility in the markets. And that's kind of what we got here. We were just kind of holding this trend line until we found out that Mr. Obama won. And of course, the markets did not take that very well. Should really be no big surprise there. We did end up hitting all of our targets on our topping patterns, which was more or less expected. We did exceed those targets. Like I said, as I was saying, we were expecting some volatility after the election, which we got. From here, longer term, I am expecting the market to start to climb higher. So if you're taking a look at the S&P for now, the market is officially, as of Wednesday, in a downtrend on the daily chart or the shorter term charts. However, that's not our only consideration. We always want to take a look at the longer term charts. And if you take a look at the 5-year, we can clearly see that our uptrend is still very strong and very much intact. The only question is, where are the buyers going to jump in and start taking this back up again? We can see that all these previous down moves were met by a bit of a bottoming pattern and then a strong up move. Some of them didn't even bother to bottom, right? So the big question is, where are the buyers going to step in? We do happen to be at a horizontal support area. If we zoom in a little closer, you see our area is here. We should probably fix this. There we go. Here is our support area. We're just hitting the top of this now. So I would say buyers have a reason to buy anywhere in this region. The question is whether we're going to actually have a bottoming pattern in takeoff or just plain takeoff to the upside. So that's going to be a wait and see. As always, we want to take a look at what the other indices are doing. If we scoot over to the NDX did break its longer term uptrend line. However, we do have to keep in mind that this is a very, very steep uptrend line, as the NDX has been very, very strong off of this bottom. In fact, it's the only one that's this much higher than its pre-crash highs here, back around 2006, 2007. And it's had a very, very strong run. And for this to come down and settle in, probably even down to the 2400 area, would be perfectly normal, and in my opinion would not affect the uptrend at all. As a matter of fact, if we get a more reasonable trend line in here, say off of these lows, we're still well above those levels there. So I'm actually going to come in here and mark this as a 5-year level to look for a turn in the NDX at that point. It will help us with future technical analysis discussions. So if we continue down, we should be switching direction right around this level. Again, we are at support with the SPX. If the SPX bounces, then we probably continue up here. If the SPX decides to come deep into its resistance level, then the NDX is likely to come down to its trend line down here. We take a look at the Dow. This has actually gone deep into its support level. It's also come to its trend line. In fact, this one may be the one to watch. This breaks down, it's coming down to here, probably 12,000 more than likely, which is another 800 points. That would be a big move. We also have some resistance support a little bit higher, around 12.3, 12.4. So those would be areas to watch in the Dow, assuming we don't bounce now. Again, the SPX bounces the top of the resistance level, and this bounces, and we just continue on. And the Russell, again, we haven't even reached our primary very, very steep uptrend line. So this is still very much in a strong uptrend, even though our dailies have temporarily turned around. Again, look at the bounces we're getting off of this level. They're very large. So something to keep in mind. So what am I expecting? Well, with the SPX where it is, I would be expecting a bounce from these levels, or any down move is viable to me, at least for a short-term bounce. If that short-term bounce fails, let's take a look at the SPX. We're due for a short-term bounce off these levels. If that short-term bounce fails over here and we roll back over, that would be the bottoming pattern we're talking about, unless we break lower, in which case we're just going to probably come into this trend line and then move higher. So for the Russell, what that means is a bounce into this area here, or the previous support level, which is now going to be resistance, a retest of this trend line, and from there, like I said, this trend line's been a pretty strong support, so especially if it ties in with this horizontal here at 770, we will get a very strong up move. If that happens, is very likely. And again, I wouldn't be surprised even if we get this sort of a reversal here. We've had a lot of topping pattern failures because the market's been so bullish, so that wouldn't be a surprise either. In general, for the week, I would say that my opinion leans towards bullish for the week. All right, let's take a look at our trades. This is what the December M3 looks like. We had, with that pullback, we did end up rolling some of this back. We had our whole position up at 790. I basically rolled these back one at a time as appropriate. We pulled one butterfly back earlier in the week, and then later in the week as the market came down, we pulled another butterfly back. I did this by adding a butterfly, then selling a butterfly, then adding a butterfly, then selling a butterfly, and then I added a butterfly and never got the 790 off because the market bounced and I couldn't get my money back for it. So when that happened and I was concerned about the market taking off, I had to hedge off that extra butterfly I have on here, and I ended up buying an additional call. So now we have we're actually up to 10 calls here, 10 IWM calls, 1 Russell call, and we're actually at 11 butterflies right now. My goal here is to get back to 10 butterflies as soon as I can. If the market really bounces, that may take a while. If the market settles in here in the 780, 800 level, I should be able to drop that other butterfly with the call and make money on the adjustment. So that's just one of the things we do when we're making these adjustments, and all is going well in this trade. Up around $1,000, even with the big moves last week. So everything's looking quite nicely. We are pretty much ready for the bounce. We're not actually this positive delta. We're actually right around 0. Very, very neutral. If you look at this position in option view. In fact, let's take a look at it times 10. This is the current position times 10. 8 butterflies at 790. 3 butterflies at 810. 1 Russell call, 10 IWM calls, showing us positive 47 delta, and we have a nice T plus 0 line to the upside. I wouldn't actually mind having this a little even more positive delta. It looks good if we stay here. We still have some plenty of room to the downside. So this position looks really, really nice, and it's going well. Let's take a look at the bearish butterfly. If you remember, on the bearish butterfly, one of the things that we talked about is that we had initially had this at 800. We had a delta theta problem prior to hitting our 840 add point. And in fact, we never did hit our 840 add point. The market backed off before then. Since we had a delta theta problem, the general guidelines say to roll this up 20 points to 820. And I was saying at the time that I'm only doing it because that's what the guidelines say to do specifically, and that the important thing isn't that we roll this up right at 800, but the more important thing is that if the market does actually ever hit 840, that we should be at 820 and 840 with our butterflies. So, a lot of times with my bigger positions, I will leave my butterflies at 800 and wait till the market actually hits 840, then do the roll to 820, and then add the 840. And the reason I do that is exactly for situations like this, right? If I think the market's kind of weak and we're having a delta theta problem and I think we're kind of topped out, there's really no harm in waiting until we hit the 840 to add. Had we done that, we'd be a little bit better off here. We'd be up in the $3,000 level. But since we did complete the roll per guidelines, we're still perfectly fine. The only issue is we're not up as much money. And of course, if we get our good bounce here that we're expecting, then we will be actually better off that we had rolled. But either way, the trade usually works out fine. So it's not a big stickler. Like I said, the more important thing is that if and when we get to 840 during this cycle, then we would make sure we're at the 820, 840 level. So if you're at the 800, you're probably pretty happy, and that's good. And if you're at the 820, no big deal either, because everything should still be fine. Even if the market comes down here, we have our rollback point at 780. Shouldn't be down a ton of money. It's just going to have to fight a little bit more because you made that delta theta roll. All right, that is it. The positions are going well. The market is down a little bit more than expected, but I am expecting a bounce in the markets this week. We'll see if that happens or if they continue to go down. Either way, our uptrend is still intact unless we get some serious down moves in the next week. That is it for now. I will keep you updated with any changes, and have an awesome week, everybody. Good night.